Welcome back. I'm Pratap here. Today is the 15th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts to access to these training lessons. Some of you might be seeing the tab Community in place of Posts. At the time, click the Community tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist, and all the training lessons are placed in this playlist. You just scroll down to the bottom of the page to access the first lesson. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to the training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So please join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Go to the pinned messages. One of the pinned messages are having all the training instructions. Learn this course according to my training instructions. Then that will help you to become a good independent trader in the coming months time period. So please make use of this opportunity. Okay, now let's get into performance evaluation of the high liquidity zones identified in the previous end of the day report. So previous end of the day report, with the help of NeoStock software, we identified 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 high liquidity zones from daily and 75 minutes time frames, and we got 3 successful trades from 3 stocks. First, let us look into one by one. First, let us look into JSW Steel. In this video, you will be seeing a very interesting concept, LOTL, origin, lower time frame origin. You already learned lesson 22 concept, a powerful concept, lower time frame zone as an origin to the higher time frame zone. So we have 2 LOTL 5-minute zones are there, but by applying a simple technique, how exactly we have drawn the zone, you will understand. And also in the same 5-minute zone also, how to fine tune the entry also you will understand. Of course, this concept fine tuning the entry I explained in several videos, but many new members are also now listening the HLQ zone analysis videos. Just to support them or help them, I will be teaching the technique once again. Okay, this is a 75-minute zone identified by our software as a rally, 2 base candles and a drop candle. Oh, just a minute. Software identified this as a drop, base, drop. Drop, base, drop. This is the 75-minute zone. Drop, base, drop, it identified. And this 75-minute zone we need to fine tune with 15 minutes time frame, but unfortunately 15-minute zones are not available here. You may say there are so many base candles are there. Let me hide the gap, then you get clarity on these candles. Now you see what kind of candles. Maybe you may say this is a drop base rally, a large candle. This is a failed ERC, a very large candle, very big candle. Compare with all these candles. This is a large candle. And after this large candle, again you have with hidden body, high explosive leg out candle. In between these two candles, there are no base candles. many such kind of scenarios, the zones will be violated. But here the interesting thing is there is a big rejection. From where this rejection is coming? That means there could be a LTF zone might be available. See how I am analyzing, how I am thinking. With the same way, you should also start thinking in the coming days. When there is a big rejection, there could be some source will be there. That might be having a strong institutional order flow. You know the power of the rejections. Okay, that's why I went to the 5 minutes time frame. In the 5 minutes time frame, now you see, you have a drop base drop and also you have a drop base drop. LOTL zones are there. Drop base drop and drop base drop. Both the zones. So what I did to get better clarity, I moved to 3 minutes time frame here. So I want to see what exactly the price structure. In the 3 minute structure, the clarity is very clear. So let me delete and I will draw again. See here, you have a drop candle, you have base candles 1, 2, 3, 4 and then a drop candle. Now exactly you can draw a zone like this. A 5 minute zone, drop base drop. And this drop base drop is the origin for this entire 75 minute zone. See, from here it is picking the orders. It picked up the order. It picked the orders from that origin. See here how sharply. So this is the area you should plan your trade. But the problem is here, but before tell you the problem, while planning the trade, what is the target? 15 minute zone. See here you have a 15 minute zone, rally, 3 base candles and a rally with hidden body. This is the area you have pro gap is there. When pro gap is there, pro gap is your target. Where the pro gap is starting? See, already it opened here, but it consumed. So you can keep your target here till the pro gap remaining pending orders area. That should be your target. But what is the entry? This should be your entry, the 3 minute zone. But if you are planning a trade in this entry, you are not getting 1:3 RR and also risk is also a little beyond 2%. So that is the reason why what I did, I fine-tuned the entry. This is important. Many of you know this concept, but new members who are listening HLQ analysis videos in the recent time and who are not aware of fine-tuning the entry. So I want to teach you this concept again. So fine-tuning entry is moving your entry a little inside until you get 1:3 RR. See, first let me keep my entry in this zone. Which tool we are using? You are already aware of long position and short position tools. I already explained these tools in our course. So this is a short position. So with the help of the short position, what you can do? Entry, stop loss and target, you can draw the zone and you can identify what is the RR. See what is the RR you are getting? 1:8.1 RR you are getting. But what is the minimum RR is required? 1:3 RR. When a zone is risk is high, what you can do? You can take a trade inside, a little inside the zone. Instead of taking at the proximal line, you can place your trade a little inside the zone until you get 1:3 RR. So now I want to move this trade a little inside. See, now I am getting 1:2 RR. Let me move some more inside. Now I am getting 1:2.5 RR. Now move some more inside. Now I am getting 1:2.78 RR. Move some more inside. See, now I am getting 1:3 RR. So that way you will be adjusting your entry. Now this is going to be your entry and this is going to be your stop loss somewhere here, because this stop loss is based on the stop buffers. And this is going to be now your, in case if the zone is violated, see, now your risk will be only your entry minus stop loss, that is 101845, 101470. So almost 4 rupees could be your loss. Maybe 3 rupee 65 paisa or something, or 75 paisa. Okay. But what is that we achieved? We achieved 1:3 RR. But what is the risk involved in fine tuning the entry? The risk involved is sometimes you will be missing the trades. How you will be missing the trade? Price reach exactly at the proximal, a little inside the proximal, again sharply it may come down. At that time you will be missing the trade. Anyway, you will be missing the trade because the risk is beyond, the risk is not within 1:3 RR. Anyway, you will be missing this trade. Why? If the risk is not 1:3, you won't take the trade. Minimum 1:3 should be there. RR. RR should be, risk reward should be, a minimum 1:3 should be there. And exactly at this proximal line, you got only 1:1.8 RR, or say 1:2 RR you got. That's why anyway you will reject the trade. Instead of rejecting the trade, what you want to do? We want to test our luck. Sometimes prices may reach up to fine-tuned entry level. Sometimes. Actually, it's not sometimes, many times. So that is the reason why we have fine-tuned our entry up to 1:3 RR level. See, today, prices reached, it went a little inside and then sharply came down until the target zone. Suppose if the prices did not reach your fine-tuned entry, anyway you will be missing the trade. That's okay, fine. But the moment it reached, see how it become a profitable trade. That's why fine-tuning the entry is a very important technique. But there are some limitations. You can't fine-tune the entry up to the distal line. See, like this you can't fine-tune. If you fine-tune, there are higher chances zones will be violated. So these are the few important points you should remember. Don't fine-tune the entry close to the distal line. It should be close to the proximal line, type 2 proximal line. Your fine-tuned entry should be close to this. See here, my fine-tuned entry is somewhat close to the proximal line. Not even in the middle of this zone, my fine-tuned entry. But if you cross the middle of the zone, while fine-tuning, if you cross middle or going close to the distal line, better avoid those trades. Ignore. Look for the trades in some other stock. Because you have so many other stocks also there. You may get trade opportunities in some other stock. So that's why always, let me summarize the points I told you. Fine-tuning the entry will help you, will enable you get a trade opportunity. Fine-tuning the entry. Because if you don't fine-tune the entry, because risk 1:3 RR is not there, anyway you will be rejecting the trade. Instead of rejecting, by fine-tuning, your trade opportunity you may get in that stock. That is the first advantage. Second advantage, because of fine-tuning the entry, your risk also will be reduced. The overall risk, in case if it hit the stop loss. And the third advantage, by fine-tuning the entry, you are getting a minimum 1:3 RR. Okay, I think that is the first point we already discussed. Okay, the next important point you should understand, while fine-tuning that entry, the fine-tuning is somewhat close to the distal line, proximal line. And most important point, fine-tuning the entry should not be close to the distal line. It should not be close. If it is close to the distal line, there are higher chances the zone may violate. Because prices are reaching. Of course, rare situations you may get success. If prices are reaching very close to the distal line, there are more chances that the zone might be violated also. So that's why properly you should do this technique, fine tuning the zone. See, my fine tuned a little inside it went. Still this much risk is there. Still this much risk is there. What does it mean? There are higher chances. Price may not reach the distal line. Before that, it will be pushing the prices down until our targets. So what is our target pro gap area? See, the pro gap area again pushed the prices up. So how much profit JSW Steel has given? JSW Steel has given a profit 7,796 rupees, which is 6.4% ROI as per one futures margin cost. So this is about JSW Steel. The next one we got is Aarti Industries. Aarti Industries, we got two trades. One is stopped out trade and one is a successful trade. Okay, Aarti Industries is a daily high liquidity zone. How our software identified as a rally base drop. So this is what our software identified. And this one is fine tuned with 75 minutes time frame. Here we have a 75-minute zone. Drop, two base candles and a drop candle. Drop, base, drop. Here we have a 75-minute zone. This 75-minute zone again fine tuned with 15 minutes time frame. See, in the 15 minutes, you have a rally base drop. Rally base drop. Not only that, did you notice again a rally base drop, another 15-minute zone, which is the origin for this entire 75-minute zone. For this fine-tuned 75-minute zone, this 15-minute zone is the origin. Your lesson 22 concept. See, previously also lesson 22 concept gave you the trade. Even in this also lesson 22 concept gave you the trade. Okay, this 15-minute zone, you can't take the trade. Again, you need to fine tune with 5 minutes. That we will see in the 5 minutes time frame. Now we have two 15-minute zones are available. One is the origin to the 75-minute zone. But this origin is also inside the daily zone. But for the fine-tuned 75-minute zone, this is the origin. And the actual leg out is also picked up the orders from this origin and came down sharply. Okay, next, let's go to the 5 minutes time frame. In the 5 minutes time frame, see here you have, let me hide this big zone, big candle, you will get clarity. This is a rally candle. You may say, no, it is a base candle. At the hidden body. See here, this candle is having a hidden body. Then it is a rally candle. You have a base candle. And then you have a high explosive leg out candle. So that way this is a fine-tuned, this is the area. And above that again you have a rally base drop. And here, remember, there is a strong rejection from this zone. I don't know how many of you remember. This point maybe so far 3 or 4 times we discussed. After the leg out, if there is a candle with a strong rejection, the zone might be having a very strong institutional order flow. You can't consider this candle as a tested zone. If there is a candle after the leg out candle, immediately after the leg out candle, prices came and sharply it came down. That indicates the zone order flow is very strong. But remember, here a limitation is also there. If this candle goes inside, deep inside, then planning the trade next time is not a good idea. Maybe it may work, but it's not a good idea because almost it went to the distal line, if that is the case. But anyway, it's almost from the proximal line only, sharply it came down. So that's why rejections are a very important price action clues. The rejections. Suppose price came down and again moved, entered into the zone, then it is a testing. It is not a rejection, please remember. A rejection comes immediately after the leg out candle. And price should come down sharply. The prices went there, stayed there, and from 2 or 3 candles, then that comes as a, what is that point? I forgot. Oh. Sorry, all of a sudden my mind is got blanked. Yeah, sluggish. Suppose if prices are, do you remember the zone strength, sluggishness? After the leg out candle, prices are moving here only, then that is called sluggishness. This is not sluggish, remember. Here prices came sharply and follow through candles came. This is an indication, actually a price action indication, this zone is having a very strong institutional order flow. So this is one of the reasons why. Do you remember in our reports always I am using 2 columns. One is testing and another one is rejections. Did you notice? Of course that rejection is meaning is different. That complete meaning of rejections why I am keeping is for some internal software calculations point of view. Many points I am using for internal calculations for making some algorithms. But in that one of the concept is this is the one. In those rejections one is immediately leg out, prices going and coming sharply, that will be considered as a rejection. It won't be considered as a testing. Please remember in our reports. This won't be considered under testing. It will be considered under rejections. Of course, a rejection is also a kind of testing only. There is no doubt in that. But immediately after the leg out candle, the rejection is having a special significance. Previously, couple of times I explained this concept. Probably important strategies and analysis videos, old videos might be available. But anyway, now also in this video also anyway, this video also will be keeping in the important strategies. The new people coming in the coming days, probably they will learn from this video. Always remember, the candle that is going to the zone and sharply coming down, and then very good follow through candles. That is an indication the order flow in this zone is very, very strong. And second point you should remember, while with this rejection, if prices are going very deep inside, close to the distal line, better avoid those zones. Maybe still order flow might be strong, but there are chances because they are close to the distal line. Maybe there are more chances to zone violation. But this zone, we should not miss the trade. Strong order flow will be there in this zone. Okay. So this is one fine-tuned 5-minute zone. And another fine-tuned, this is the one here. But did you notice this is somewhat close to this? Even then, sometimes what happens, prices reach and it will come down. It won't go to this lower time frame horizon. This is actually lower time frame horizon. Because this is a lower time frame horizon, this zone supports multi-testing. See, this 15-minute zone is the horizon for this. That's why multiple testing it will be supported. Apart from that, already this price action clue rejection gave us a very good indication. That is another advantage. The two advantages. This is the horizon, a fine-tuned zone inside the 15 minutes horizon. And the rejection is a price action clue immediately after the leg out, indicating this strong order flow will be there in this area. That is another advantage. Third advantage, because it is the horizon, it supports multi-testing. These are the advantages we have. But below that, there is another zone is there. Can we consider as a LOTL zone? Maybe, may not be, because see the blue color line I have drawn, that is the stop buffer value. If the stop buffer value is going inside this fine-tuned area, then we would have considered both as LOTL. So that's why what we can do, in case if this stop loss is triggered, then immediately we will plan, we will exit the first trade, immediately plan another trade in this area. Because horizons are very, very strong, lower time frame zone horizons are very, very strong, we should not miss trades from that zone. Okay, here from the 15-minute zone it picked up the orders and then sharply it came down. So this is definitely good area, but unfortunately today this is stopped out. See in this candle at 10-15 minutes, 5 minutes candle. If you go to 1 minute, you get better clarity. So in this candle, 10-17 candle, it crossed the blue color, your stop buffer. This is the stop buffer. You might have exited your trade. And next candle, see, you got the trade, and then sharply it came down. There was some movement and finally reached the target. When it reached the target, in this candle, at 12.9 candle, you got the trade at 10.18 and 12.9, almost 2 hours. It reached the target. So how much profit Aarti Industries and how much loss also? Because first one is stopped out, second one is executed. Aarti Industries has given a profit 7,300, which is 6.6% ROA. And the stopped out trade is 1,250 rupees. 1,250 rupees, which is a minus 1.1% negative ROA it has given. So these are the two trades from Aarti Industry. Because top one we should not. Due to any reason, if both are very close, even if you ignore the first one, second one you should not miss, because that is from the LTF origin, lesson 22 concept. Those origin supports multi-testing. Maybe next time also it may work, but already it is very close. Without gap up, if it opens maybe in the next trading session, if reach maybe again, once again it may push the prices down. That possibility is there. But anyway, our software identified this zone and we got the trade, a successful trade till the 15 minutes target. Where is the 15 minutes target here? Here we have a 15 minutes target. See, here we have a failed ERC, dynamic view, rally candle. You have a base candle, you have a rally candle. This is the 15 minutes target. Okay, this is about Aarti Industries, and one more trade we got is from Laurus Labs. Laurus Labs is a daily, this is also a daily high liquidity zone. How our software identified this zone? As a rally candle, 1, 2, 3 base candles and a drop candle. This is how the 75-minute zone is created. Daily zone is created. And one more, Laurus Labs, it identified as a stocks near daily supply zone, and also it is listed as stocks near 75 minutes supply zone. This is there in both the places. The fine-tuned 75 minutes zone inside the daily zone is also a high liquidity zone. And this 75 minutes high liquidity zone also, see yesterday's candle. Yesterday means the previous. The last Friday is previous working day. The last Friday's candle it displayed here. And today candle it is violated, but before violation it gave a trade, it reached the target. Here target is different. We will be using a concept called support line. Previously also I explained this concept, the support line. That video is also there in important strategies and analysis video. You can use support and resistance lines. If zone is not clear, if support line prices are reaching same point and again moving up again and again from that point, that you can use as a support line, that you can use as a target. In traditional technical analysis concepts, if you are aware, you know about the concept support and resistance lines. Okay, anyway, this is a daily zone, high liquidity zone, and this 75-minute zone is also high liquidity zone. Go to 75 minutes time frame. So in the 75, you have a drop, 1, 2, 3, 4 base candles and drop. This is also a high liquidity zone. So you can plan trade first in this area. After that, in case if this is violated in the daily area. In the daily area, you have one more 75 is also there. Rally, 1, 2, 3 base candles and a drop candle. And this 75 and both the 75 minute zones we need to fine tune with 15 minutes time frames. Here we have two 15-minute zones. Rally base drop. Here rally 1, 2, 3, 4. Sorry. Here I consider this as a failed ERC candle. Drop, 3 base candles, and a drop and follow through candles. This one, now you will get clarity. Drop 2 base candles and drop, follow through. Why I didn't draw 5-minute zones here? I'm just wondering why I did not draw 5-minute zones. Maybe I forgot. I don't know. We'll see. But here we have one more 75 minutes high liquidity zone. This is the 75 minutes high liquidity zone. In this 75 minutes high liquidity zone, drop candle, 1, 2, 3, 4 base candles and a drop candle. So this is the 15-minute zone. And within this area, again fine-tuned with 5 minutes time frame. See, you have a drop, base, drop, a very big candle right here. So what I did is I fine-tuned, because the 5-minute structure is not really very clear. I fine-tuned with 3 minutes time frame. See, rally, base, drop, and this is tested. Again rally base drop, LOTL zone is created, right? Maybe there is a chance that this could be a high liquidity zone. So it supports multi-testing. See, already tested once. Second time while testing, again a rally base drop is created, but this is the origin. The origin only you have to plan your trades. If you are adding LOTL, what will happen? Risk will be improved. If risk is increased, again you have to fine-tune the entry, what I already explained, that technique you have to use. Instead of that, if you plan your trade within the horizon, your risk will be minimized. That is the advantage you get anyway. And also see from the same area, this time it gave here also you see drop, 3 base candles and drop. This is again a LOTL zone. Multiple LOTLs are getting created. That's why you can plan a trade. Those who are planning for HLQ zones, traders, because some of the people might avoid these zones because it is tested. But if you are a HLQ zone trader, definitely you can plan a trade. And today it gave you another successful trade. See, rally base drop. But it is pierced. This time it is pierced. Of course, now also it is created rally, base, drop is created, LOTL. But after piercing, LOCL is created. But here, notice this blue color line is your stop buffer. Your stop buffer value. So it is within the stop buffer. But it reached here. Did you notice there is a gap in between these two candles? Are you seeing a pro gap? Within that pro gap area, prices are reaching and again moving, again reaching, again moving. That's why here I have drawn this blue color line. But this is not a 5 minutes gap. If it is a 5 minutes gap, we would have taken. See, 5 minutes we haven't seen the gap. 3 minutes we have seen. If it is a 5 minutes gap, probably here itself we would have booked the profit. Many times these gaps will be violated and prices reach up to this 15 minutes pro gap area. But today it didn't happen. Within this 3 minutes gap, they are struck up. That's why I have drawn a blue color line. Maybe this could be when I have drawn after seeing both these candles. Maybe this is the area we need to book the profit. See, Third time again the same, if in case if you don't book the profit in this. See, prices sharply came down. Once again they came. Fourth time you should book the profit at this blue color line. You can't wait that much time. See, third time it's 2 times it is. Third time is a strong confirmation. Fourth time you have to book the profit at it. Maybe it went, this time it went a little below this support line. Generally it happens. Prices will be moving around the support line. In case if you did not book even here, see, once again prices came a little bit, again moved. See, again from the support line, again it started booking. Even now if you don't book, probably all our profits would have been gone. That's why understanding the support line concept and resistance line concept for placing your profit booking is also very, very important. Many of you are aware of this technique because the same technique I explained in detail earlier. But once again I am explaining because some of you might be having, some of you might not have attended earlier videos. Okay, that's why here profit should be considered up to this. And you have 1:3 RR is there. I think it is beyond 1:3. Until this area, you have around 1:3.5 or something. Profit RR is there. Okay, why we are drawing this blue color line? The reason behind is we can't find a zone at 1 minute level. Maybe you may find a zone at tick level, like seconds level. Maybe 15 seconds zones or 30 seconds zones might be available, but we have data accessibility up to 1 minute. So tick level analysis we can't do. So this is the reason why we are drawing these support lines. Definitely within this area some zone might be there. Some 15 second zone or 30 second zone might be available. That is acting as that might be acting as a high liquidity zone. That is strongly holding the prices. Instead of drawing those zones because I'm not having the accessibility, we are using the conventional technical analysis concept, support line or resistance is at the upper side, we call it as a resistance. See how it is supporting. So this is the area. In this candle mostly you should book the profit. Either in this candle, if not this is the candle you have to book the profit. Got multiple opportunities here. Here again this is the last opportunity to book the profit. See, by the time already see how much time it consumed. You got the trade at 9:24 candle. The last opportunity you got, this is the candle, 12:54. So definitely you won't be there that much time on the trade in the intraday. Okay, anyway, till the support line, and also it gave, maybe some of you might have exited at 1:3 RR level because it is already zone is pierced. It is pierced, there are higher chances. Generally, when a zone is pierced, many times people will be booking the profit at 1:3 RR level itself. Here we got an opportunity to book the profit at a support line. Performance point of view, I'm talking about performance point of view. 1:3 RR means somewhere here you might have booked the profit. Up to here 1:3 you will be getting. Let me show you. Short position. So this is our stop buffer, and probably your entry could have been somewhere here. What is the entry? 621.75 paisa. 621.75 paisa is your entry. And what is your stop loss value? 623.15. 623.15. Okay. So this is the exact values. And where you are getting 1:3 RR? Maybe somewhere here. So here you would have been booked the profit. So those who are. So till this blue color line, you got some extra profit. This is performance calculations point of view. Or those who are aiming for more profit, probably you would have got 1:3.68. Not 1:3.6, a little less you will get. What is the value? 616.65. Profit 616.65 here. Yeah. You would have got 1:3.64 RR you would have achieved. Those who book the profit at the support line. Small difference will be there. Nothing much. Okay. So how much profit Laurus Labs has given? Laurus Labs has given a profit 8,670 rupees. But ROI is only 3.4%. Return on the investment. See here you got 7,300 but you got 6.6% ROI you got. But here more profit you got 8,670 but ROI is less. Almost half of this ROI. Why? The reason is here futures margin cost is around 2,70,000 something around that value will be there. But here it is around maybe 1,10,000 or 15,000 or 1,20,000. So due to that difference, ROIs are getting changed. See, ROI is always calculated based on your capital investment. To buy a future, here maybe 1,20,000 or 25,000 is enough for this Aarti Industries. But for Laurus Labs, you should invest around 2,70,000. So you have to calculate ROI on your investment, that is 2,70,000. So these are the three trades we got. Remaining we didn't get any trade opportunities. So one stock we got a trade opportunity that is violated and we know that the zone will be violated because the zone is already tested zone. First we will look into the stocks quickly one by one. Federal Bank is a daily high liquidity zone. I didn't fine tune this zone because the structure is not good. Look into the 75. Earlier you have a failed ERC candle as a rally, 1, 2, 3, 4, 5 base candles. This is already violated in this candle. So that's why we are not planning any trades in this. Next, Canara Bank. Canara Bank is daily high liquidity supply zone. Our software identified this as a rally, 3 base candles and drop. And this one is fine tuned with 75 minutes time frame. Here we have a rally base drop. This 75 minute zone fine tuned with 15 minutes time frame. Here we have a 15 minute zone drop 1, 2, 3, 4, 5 base candles and a drop candle. This is again fine tuned with 5 minutes time frame. Rally base drop, but this is a tested zone. Because it is a tested zone, you can't plan a trade in this zone. Maybe if it is a high liquidity, it may work, but high liquidity we know only after multiple testing. Maybe after 2 or 3 tests you can confirm. If LOTL zones are getting created from the same area, we may at least assume 80% level, it could be high liquidity. But as of now, it is a tested zone. Next one is Sriram Cements. This is the one, a tested zone. We identified this zone will violate. Okay, let's go to the daily time frame. Software identified this zone as a rally base drop. This daily zone is fine tuned with 75 minutes time frame. See, this is, I consider this as a failed ERC as a drop candle, dynamic view. This is a leg-in. And we have 3 base candles and a drop candle. And this one is fine tuned with 15 minutes time frame. See here, drop base drop, 15 minute zone. This 15 minute zone is again fine tuned with 5 minutes time frame. See here you have a rally, 2 base candles and a drop candle. The type 2 proximal is tested. See, in this candle it is calculated. You may consider this is a rally based drop. No, it is not a base candle. This is also a medium size rally candle and then drop candle. If it is a base candle, I would have considered maybe it could be 80% level, at least confidence level. We might have thought it could be high liquidity. We would have taken a trade. Actually, it is a pivot. It is not a zone. That's why today easily it is violated. Today it is gone. When it is gone today, which candle? Morning 9:16 candle. It's gone. Okay, anyway, Sri Ram Cements, it is as per our lesson 16 concept. Lesson 16 you learned when a zone can be violated. Okay, and the next one is Angel. This is a daily, not daily, 75 minutes high liquidity demand zone. Software identified this zone as a drop candle. Is it a drop? At the hidden body here, then it is a drop candle. You have 3 base candles. Medium size candle is also part of the base, and then you have with the hidden body a rally candle with hidden body, and this remaining could be like a wick. That way you can assume dynamic view point of view. And this zone is fine tuned with 15 minutes. We have multiple order flows are there. See, you have a rally base rally, again rally base rally. Here also you have a failed ERC candle as a again 1, 2, 3 base candles. Medium size candle is also part of the base and rally candle. 15-minute zones. And in this 15-minute zone, again fine tuned with 5 minutes time frame. Here you see rally 1, 2, 3, 4, 5 base candles. It looks like that, right? So that's why I'm not comfortable with this structure. What I did, I went to 3 minutes and I have drawn. Actually 3 minutes you have to draw distal line a little above, but I extended up to 5 minutes level distal line. I will show you later how I have drawn. And then you have a drop base rally, another fine tuned 5 minute zone. Here also rally base rally. Actually, to minimize the risk, you can also draw the zone like this. Because pro gap is there, I have drawn. If the risk is beyond 2%, either you go a little inside or maybe draw up to this level. It's up to you. Because imbalance started from this candle. Time is over and continued from here with the gap up. Okay. And this one, how I drawn, let me tell you. Because entry I didn't go up to here. Because if I go up to entire 15-minute zone is getting occupied, risk will be increasing. That's why what I did, I went to 3 minutes time frame. In the 3 minutes time frame, you have an excellent. See here, you have a rally, medium size candle, you have a base. How you have to draw the, up to here you have to draw. And then a rally. But what I did, because 5 minutes point of view, because the gap is very small till the distal line, I have extended up to the distal line. But entry I am planning here. Now you go to 5 minutes time frame. Now see the zone, it is exactly what I drawn earlier. See, these kind of adjustments you should learn. Once your experience grows, you will understand about adjusting all these levels, how I am fine tuning. You may ask, why extended up to this? Because this 15-minute zone, earlier 5-minute zone, the distal lines are almost same. Sometimes price may go up to here and again it will go up. That's why I don't want trade to be stopped out. So that is the reason why I have drawn up to this 5 minutes level. If risk is beyond 2%, then you will adjust up to 3 minutes distal line. But this is within our accepted risk only. But anyway, today price did not enter into this zone. We didn't get a trade. And Coforge is a 75 minutes high liquidity zone. Drop base rally. Why I didn't fine tune? Go to 15 minutes time frame. See, the zone structure is not at all good. All base candles, drop 1, 2, 3, 4, 5, 6, 7, 8, 9. Lot of consolidation took place here. So many times such kind of zones will be violated easily. So that's why here I didn't show any interest on this zone. And the last one is Ultratech. This is also 75 minutes demand zone. Drop base rally with pro gap. This one is fine tuned with 15 minutes time frame. Drop base rally. Looks like it is also a medium size base leg candle, right? But it is having wicks. Okay, you can consider this as a base because its body is only between 50 and 60%. Okay, you may consider as you have choice to consider. The reason why I considered within this area there is a strong 5-minute zone is there. So that's why I have compromised and drawn 15-minute zone. See here, excellent drop, 2 base candles, rally with pro gap. So that is the reason why 15 minutes candle I consider that as a base candle, the second one. Drop base rally. 5 minutes it is a very clearly drop base rally is there. But previously we have drawn this Ultratech, a daily zone we have drawn. This is the fine-tuned area. See, this is the candle opened, daily candle. But if you look into 75 minutes, see 75 minutes candles are not outside the zone. Then why this difference is coming? Why daily here? Because the daily candle is including pre-market. The pre-market opened above the zone. And the post, that means from 9:15 onwards. If you consider that market prices are opened within the zone only. So because of that reason, this zone looks like still not violated. Still this zone is holding the prices, but anyway, you can't consider this zone because the daily point of view, this zone is gone. This daily zone is gone. Just I want to show you, that's why I kept this zone on the charts. Now I am deleting this. Okay. So these are the high liquidity zones, what we identified from the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.